A long position is when you buy a stock, also known as going long, expecting price to move upwards and making a profit based on its appreciation. For example, you buy a stock for $5 and it appreciates to $10. You've now made a profit of $5. This is the Upwork stock. You identify this great long trade setup here because you're at a key level with multiple touches. You're trading with the moving uptrend through the higher highs and higher lows. You have a trend line that crosses, making this an area of confluence. You have a candle color change and a long wick candle, which shows a reaction to the key area. You also have a recent reversal point close by to the left, showing that this level is valid and respected during this recent time period. Knowing all of this, you decide this is an amazing long trade opportunity and believe that price will continue upwards. You want to buy the Upwork stock and enter into a long position. Let's say you have $500 you want to invest. This candle close here, which was your long entry point, is roughly $10 per share. To figure out how many shares you can buy with $500, take your $500 and divide it by $10 per share, which gives you 50. Meaning with your $500, you can buy 50 shares of the Upwork stock at this trade setup area. Price then takes off upwards, and you notice this recent swing high reversal point here, which makes a resistance level and supply zone. You also notice a very long wick candle form, which shows a reaction to the zone. So you decide this area here would be a good time to take profit and close out your long position and go buy your Lamborghini with your winnings. This candle close here is roughly $14.80 a share. Remember that you have 50 shares of the Upwork stock. So you take 50 and multiply it by $14.80 per share, which gives you $740. To figure out your profit, you take the $740 and minus the $500 it originally costed you to take on the long position, and you are left with $240 in profit. Now, going in the opposite direction. A short position is when you sell a stock, also known as going short, expecting price to move downwards and making a profit based on its depreciation. For example, you want to short one share of XYZ stock that is trading at $10 a share. So you need to borrow one share of XYZ stock from your broker, and then you sell it on the open market and pocket $10 from its sale. You now owe your broker one share of XYZ stock. At a later date, XYZ's stock drops from $10 a share to $5 a share. You buy back one share of XYZ stock for $5 and give it back to your broker. You've now made $5 from this short trade, as you previously sold one share for $10, but it only costed you $5 to buy it back and settle your debt with your broker. This is the Funko Pop stock. You notice this recent swing high reversal point here, which gives you a supply zone and resistance zone. As price comes back up, you notice a wide divergence form inside of the zone, which signals a possible reversal is coming. You have a rising wedge pattern, and once it breaks below the pattern and also forms a lower low, you believe price will continue downwards. You then decide you want to open a short position. You have $1,000 you want to use to short the Funko stock. This candle here, which was your short entry point, is roughly $11.80 per share. To figure out how many shares you can short, take your $1,000 and divide it by $11.80 per share, which gives you roughly 84.75. And you would round down to 84 so that you don't go over your $1,000 limit. Now, with your $1,000, you can borrow 84 shares from your broker and sell it on the open market at $11.80 and pocket $991.20. Price then continues downwards, and you notice this recent swing low reversal point here, which makes a support level and demand zone. You decide this area here would be a good time to cover your short position. This candle close here is roughly $7.30. Remember, you owe your broker 84 shares of the Funko stock. Buying back 84 shares at the market price of $7.30 will cost you $613.20. After you settle your debt with your broker, you take the $991.20 you initially got from selling at the top, and you subtract $613.20 from buying back and covering your short position at the bottom. And as a result, you've netted a profit of $378. Now, before we continue, make sure to hit the like button, as it allows for our team to continue to produce more